Fabulous Friday. Today we're going to talk about how we're going to fund these real estate transactions. More importantly, how do you finance a non-habitable property? This real estate game is not new to us, right? We are true to it. And today I got my girl, Stephanie Sowell. What's going on, Stephanie?
Hey, Marky, how you doing?
I'm doing wonderful. You know, a lot of people don't know, but we go 20 years back, right? 20
Yes,
when you was
yes,
on 95th Street off of
yes,
Damon
yep.
at Wells Fargo many moons ago. And you have always killed the 203K game. And I absolutely love the 203K purchase rehab loan because I was able to create $190,000 in sweat equity in 12 months. As
Yep.
a 203K specialist, because I know you stay updated on everything, but before we get on those updates, if you have any questions on how to finance non-habitable property, you know, those properties that lack curb appeal, maybe the bathroom has no, the property, right? Physical obsolescence. You remember that term in real estate school?
Mm-hmm.
Right?
Yeah.
Those 3 and 4 bedroom houses with only one bathroom. I want you to drop those questions down for us, no matter what platform you're on, because I got a ride or die 203K specialist here with me today, who has closed. I don't, what, billion, hundreds of millions?
I don't know,
Billion
Marky.
at
It's almost 30 years now.
this point.
So it's almost 30 years me doing 203Ks. And I want to say that we have been on each other at least 25 of those years.
Yes, you were one of the first people I met when I
Right,
came into the real estate game, and you were already an expert there. Um,
right.
so what I want to know, first of all, you know, the world is opening back up. We've been on lockdown to some degree here in the state of Illinois now for 15 months. What
Right.
are the changes? Let's just start with the changes first to the 203K purchase rehab loan.
Okay, so not a whole lot of changes, just a couple of changes in terms of the 203K. One of the changes that we have experienced here at Loan Depot is that whenever it's a multi-unit, initially we would do the 25% vacancy factor. Now it's 50% because of COVID. So if a property rental is expected to be 100,000, then we would have given 700. Excuse me, $1,000. Then we would give 750. But now you got to take an additional 15% off of that $750. So that's something that's new since COVID has been out. Normally our rehab loans we would go down to a 580. It's a 620. We had stopped doing the renovation rehab, but now that's back up and running again, where you can have a VA renovation going on now with a credit score of a 600, and that's 100% financing. Um, the conventionals are the same. Not too many things. One that was brought to my attention that was new to me, which was kind of shocking, is that you know how you get those back porches with the city of Chicago, and they want those back porches to be torn down. Well, if you have to rebuild a back porch, the appraiser have to be able to give dollar for the value of that back porch. So if that back porch costs us anywhere from 30 to 40,000 to rebuild, it has to be worth that amount for the appraisal. If not, then it cannot be included in the renovation costs, and you have to figure out how to get that back porch taken care of out of pocket. If it's just repairing the back porch, then it's fine. So those are only the kind of changes that I've seen. Everything else is pretty much the same.
Okay, so a couple of things that are standing out to me. Let's go back. Well, let me come back again so I can just highlight why I 100% love the 203K purchase rehab. I was determined 11 years ago that I was going to live in a house that my husband could afford solely. I did not want us to be living paycheck to paycheck. And truth be told, I like a man taking care of me. That means that I had to figure out financially how to live where I wanted to live on his earning potential. So my husband told me that we would not be able to live where we live because at the time houses was going for like $700,000, and I knew income wise he couldn't qualify. So I was saying, oh, we're going to need to buy a two flat do a 203K loan, convert that two flat to a single family residence. And we'll get into why that could be beneficial in some areas. Even though Wayne Bill yesterday told me he didn't like my idea for certain areas, but let me come back to that later. So our house was a foreclosed home, and the developer had politely uninstalled everything in the property. With him uninstalling everything in the property, what was initially a $650,000 house came to the market at 148.9. We offered $200,000. So my first offer was my best offer. I tell everybody, if you really want a property, your first offer should be your best offer. I knew then what the after repair value of our home was, and we did the streamline 203K, which gave us an additional $35,000. And I politely put the bathrooms and the kitchen back into the house. 12 months later, we came back and we did a rate and term refinance at a 62% loan to value. 62% loan to value. My house had appreciated $190,000 in 12 months. It had appreciated $190,000 in 12 months. Well, today, and I'm going to thank David O, my realtor around the corner, my neighbor, Coldwell Banker. Um, I'm getting ready to get me a 685 comp. Now I have comps on my block that closed at 789, but those aren't justified comps for my house. But I'm getting ready to get me a 685 comp. So think about this. Had my first offer not been my best offer, I would not be sitting here 11 years later in the midst of a pandemic and everything else on the south side of Chicago and have $450,000 in essentially sweat equity. That's the true power of what a 203K loan can do for you, because oftentimes we're looking at those short-term gains, like that $190,000, right? I want you to start thinking long term. I'm saying 450,000. That means that I'll be able, or well, let me say this. I've already sent a child to college, okay, based on the fact that our PITI is less than $2,000 per month. I live in a house that my husband can afford solely on less than one check. And that should be the goal of accumulating wealth. So the 203K allows you to build a legacy and create the home that you truly, truly desire. But one thing that Stephanie stated was the multi-unit 25 to 50%. So historically, if the rents were $1,000, they would allow you to count 75%. That means that you could count $750 to offset your monthly payment. Well, now, due to the fact that people aren't paying their rent, due to the fact the moratorium is over at the end of the month, they're saying, hey, we're not going to let you count $750 per thousand. We're only going to let you count $500 per thousand because we know people are not paying their rent. But where else are you going to go and get a purchase rehab loan at a 620 FICO score, okay, or a VA renovation loan? When people are coming back home from war, sometimes they now have physical disabilities that they will need special accommodations. You can do that with this 203K loan. And I'm laughing, kind of not laughing, but the back porch issue. I just reached out today to get a list of properties where a violation has been filed for the back porch issue, not taking in consideration talking to Stephanie today. So, Stephanie, when we look at the 203K loan, I know that we have our streamlined 203K and then we have our full 203K. Are there any differences, and how much can someone borrow? Oh, I think our audio might not be working. I need your audio, Stephanie. So the questions are, what markets does Stephanie loan in? Well, Ebony, I know she's here in the state of Illinois, but I believe that they have the ability to loan in multiple states. Can you hear me, Stephanie? I'm gonna have to probably text her. The ability to loan in multiple states. This technology ain't always right. So maybe she'll come over and chat to me. I'm gonna see if some of these questions I can answer. Are 203K loans available to be used like bridge loans? So let me give you an answer to that. Don't know if this is going to answer that question. When we did our 203K loan, we lived in a condo. I was able to roll in 6 months of principal, interest, taxes, and insurance into the loan. Okay. So I only needed to pay for where we were living. We did not have two mortgage payments for 6 months because we were able to roll in up to 6 months of principal, interest, taxes, and insurance into the loan. Now, I want you to think more strategic. We came back 12 months later and did a rate and term refinance. And the reason we came back 12 months later to do that was because when you look at FHA loan products, they have an upfront MIP. Okay, so that means they have upfront mortgage insurance protection. I got to get my acronyms correctly. So it has upfront mortgage insurance protection. So every single month, regardless to the amount of equity you have, you still have to pay mortgage insurance premium. I didn't want us to have mortgage insurance premium, and I knew that we had enough sweat equity in the property. That's why I know that 12 months after the fact that we were at a 62% loan to value because we came back, we did a conventional rate and term refinance to eliminate the mortgage insurance protection, and I actually reduced our payment. And when we first, this is crazy, y'all. When we first moved into this house, 11 years ago, our mortgage PITI was about $2,200. Our PITI now is $1,900 because one, we got a lower interest rate. Two, we were able to eliminate the mortgage insurance protection. And then three, I also appealed our real estate taxes. So over time, I'm paying less, but I have roughly $450,000 in equity today. Now that's the and I want to say this. I have always made good real estate purchases. One, because I think like an investor, and it's not an emotional buy. It was 100% on the numbers. And I don't know if you guys are aware of this. Love letters are now being considered unlawful in states. So everybody writing them love letters to the seller, they are being viewed as unlawful in numerous states. Do check with your state before you write one. When we bought this house, I wrote a love letter, but it was business to business. So when I sent in my offer for this property, I wrote the listing agent a letter. And my letter stated is, we've been doing business together for over a decade. Now, this is where good reputation comes in. I have closed every single deal I've ever submitted to you. I would like an industry courtesy if someone's offer looks better than mine. But I do believe that my first offer is my best offer. Mind you, it came to the market at 148.9 and I offered $200,000. Also, I did not have a home inspection contingency, even though I had a home inspection with my favorite home inspector of all times, uh, Dan. And then what else? I put more earnest money, so I did not put $1,000 earnest money down. Memory serves me right; it was $5,000, and I actually had to ask for an extension, and I had to pay for that extension in advance. If it was a 15-day extension, I had to go and give them another $1,500 because sometimes a 203K loan can run over. Stephanie, can you hear me? I can't hear you. I'm gonna need your audio. So let's see here. Going through the alley, checking out house back porches. So did you get that from me, Facebook user? So one of the things that I told everybody a couple of weeks ago, everybody is talking about driving dollar mastery. In Chicago, I believe you should do driving alley mastery. The one thing that if you think about when you drive the alley that you cannot see, a lot of people properties look really good in the front. That does not mean that is the true condition. You know how they say perception is reality? So if you drive that alley, you can see back porch issues, you can see garage issues, you can see if that backyard is well kept or not. We should be driving the alley. Couple of reasons. Multifamily property owners, especially those of residential, they are struggling. Okay, we're getting ready to see notice of defaults being filed. That does not mean it's going to be subject to a short sale. Also, just because the moratorium will be over on rent at the end of the month doesn't mean that those tenants are going to start paying their rent. A lot of landlords of 2 to 4 units are financially struggling. I want to couple the notice of default list with if violations have been filed. And I already know that I can come back to Stephanie and get them pre approved to do a 203K purchase rehab. But she just threw me a little monkey wrench with this new back porch issue. But if they got some equity in there to make this deal work, right? Then we have to accommodate, we have to ask for credit to reduce that price in order to make this deal work. Stephanie, can you hear me? Yeah, the audio's not coming through. I do see your lips moving. Um, Maybe look at this screen and see if it's something going on with the audio, and then make sure that your audio is picking up on this. So I'm gonna just keep answering these questions. Um, she is in Georgia as well. Someone did say she is in Georgia as well. So for Ebony Killian, my girl Ebony, you can reach out to Stephanie. She knows the ins and the outs of this business when it comes to that 203K purchase rehab. She does know the ins and the outs. Did you have to wait the 12 months based on the loan terms, or was that by choice? So based on the loan terms, you could do it, but a lot of people want seasoning on title first. And so we just decided that we were going to wait the 12 months. We didn't even attempt it before the 12 months, but FHA would definitely allow you to come back in 12 months. You could come out of that FHA product, but the question is who is going to refinance you? It is going to be contingent upon their overlays and their terms. We knew when we came in, we were going to wait the 12 months to do the rate and term refinance to lower the interest rate and to get rid of the mortgage insurance protection that came with the FHA product. Ebony said that she needs you. Good. I'm glad to hear that. Look, I know Stephanie so well. I just took over the Stephanie program. And but what I want you to do is click on the link. There is a link in the description if you need more information. So Ebony, definitely click on the link. We have information available for you. You can just go right now and click on that link. We got another question here. Would you suggest doing a 203K even if the home is recent new construction or less than 10 years old? Asking because a lot of builders have issues after the home has been lived in for a matter of years. So let me say this. The home that I live in was 3 years old when we did the 203K purchase rehab. Now, mind you, he had politely taken everything out of the house. Would I do it on a newer home? Yes, especially if that newer home does not accommodate you. So if the newer home does not accommodate you, the property must be complete. If I'm not mistaken, Stephanie can shake her head. They will not allow you to finish a builder's build out. But if the property is complete, she's shaking her head. If the property is complete, then you can come back. Um Maybe you need special bathrooms, wider doors, maybe the builder did not complete the basement, right? And you want to complete the basement. So I would do it provided that you have the after repair value comps to justify the improvement. If you don't have those after repair comps to justify the improvement, then no, I wouldn't do it. Let's see. Stephanie, say something. Yeah, I don't know why it's not giving us your audio. Your audio is on. Let's see here. Yeah, it's on. I'm not muting you. I don't know why it's not letting you come in, but we're gonna keep posting these questions, Stephanie. Hold on. Um, Approximately how long did it take to close on a 203K loan? I'll tell you, for me, it took us, I got that extra 15-day extension. It took us 45 days to close on mine, but I did a streamline 203K. I did not do a full K. Stephanie, you could just kind of write it down. Is the timeline, should they do 60 days now? If they should do 60 days, go on and put that up. Um, uh, Stephanie, they want to know, are you licensed in Pennsylvania? 60 days. So when you write your contract for 60 days, okay, on a 203K purchase rehab loan. Are you licensed in Pennsylvania? She's not licensed in Pennsylvania. I don't know if I missed this. Does a licensed and bonded contractor have to do the work on the 203K? I think she's looking at it. So with me, we did have to use a licensed and bonded contractor. Yes, Stephanie, it's still not working. We did have to use a licensed and bonded contractor. They do not like to give you recommendations, so you need to find that person. In today's market, with the cost of lumber being so expensive, you want to include that as well in your process. Hold on. Stephanie, can you talk? Yeah, I'm still not getting you. I don't know. Go back and see if you can come in on your other device. So yes, you do need to use someone who is licensed and bonded, okay? Replying for Ebony, perfect. Do you have the work plan before closing on the 203K? Do you have the work planned? Yes, you do have the work planned. You have to have a whole detailed report. Also, when the appraiser comes out, they're going to appraise that property in its as is condition. There's a list of recommendations for things that must be done to make that property habitable by FHA standards. And then they're going to, they're going, yeah, I'm getting the audio, but I'm getting that feedback. Stephanie.
Yes, can you hear me now?
I can hear you, but hold on one second. Let's go back to this. Which device? Hold on. Let me turn this one off. Talk again, Stephanie. Yeah, you know what? I'm hearing you through the computer, but the computer is still providing the feedback. So here's what's so funny about this today, right? And I'm going to just keep both of them there, Stephanie, for a minute. What is so funny is this is a great example. So I have a private membership group. We have 750 people in the group. And I'm encouraging them to do live streaming video where they interview someone. And I know that people think that my stuff is always flawless. It's not always flawless, but you have to just keep going no matter what happens. And so 100%, I'm okay with this happening today. Only because I understand the 203K like the back of my hand, because I've experienced it not only for myself, but also for my client. And I listen to Stephanie when she talks. So when you have the different strategic partners in your marketplace, listen to them when they talk. So I am going to stop talking. I'm going to turn on Stephanie's other camera, and I'm just going to allow her to talk to you guys, because if I keep talking, it'll give feedback. Okay, Stephanie.
Can you guys hear me? You can hear me pretty good now? Okay, I'm sorry, guys. Marky is like the genius when it comes to all of this technology, and I just don't see how in the world she does it. I just don't. I apologize. You guys can email me, text me, call me with any questions you may have. I'm willing to help everyone. If I'm not licensed in your state and you want to do a 203K, I can get licensed in your state. It's not difficult for me to get those licenses, okay? But everything that Marky said is absolutely correct in terms of the 203K. I've been doing these loans for almost 30 years, and basically they're very simple. The major thing with the 203K is finding a licensed, insured, bonded contractor. You kind of need to know who that contractor is going to be up front before you actually find a property, so that when you find a property, they're willing to kind of go out and give you some kind of ideas of what it's going to cost in terms of rehab to get that property up and running. And then at that time, that cost is then added to the purchase price. You're going to have one closing, one loan amount, but we're going to add those two together. The rehab cost plus the purchase price will all be rolled into one loan. Your down payment and closing costs will be based off of that grand total. You're going to close on the property in an as-is condition, and then the work begins after closing. So it's very important to include everything that you want in the rehab cost, because after it closes, it's kind of hard to add new things in. You can do changes, but not really adding in new things. With the 203K, you can get everything included in the rehab except furniture. You would not believe how many people want to put in their dining room set, living room set, and sofas and stuff. No, it's just things to the property to make the property in livable condition, or to make it what your desire is for it to be. Okay, so everything can be included up into, also including appliances. That can be included into the rehab cost as well. Marky, is it really bad?
It is a little bad. So I'm gonna mute you on there for 1 second, and I'll unmute you as need be. So just give me 1 second here. So what if you don't have a clue of where to find the contractor? You got to find your contractor. One thing they don't do is provide you a list of contractors, because then that increases liability for them. Um, so I would say start networking, especially on Facebook. I know that I'm in a couple of different groups. One would be the renovation room for this, is for basically the state of Illinois, city of Chicagoland area. Right now, though, contractors are overbooked. So I'm forewarning you right now. Contractors are overbooked, and lumber is definitely an issue. Is there a list of approved Loan Depot contractors? I think that there is a list. Let's see what we got going on here. Let me do this one. Stephanie, can you say something? Yeah. We can, the mobile device is not going to work. I don't know what happened that it cut that audio out. So here's the question, Stephanie. Do you have an approved list of contractors? I'm going to go over here and
We
take off.
do have, I do have a list of contractors that I use, but I do not refer them to the borrower. I would refer them to the realtor and let the realtor hand them over to the borrower.
Good
That's the
idea.
same way. Yes.
Good idea. Hold on. Just stay right there. I'm going to mute you. And so let's see here. Let's see what this next question is. You all got some good questions here. What if you don't have a clue? The contract. And let me say this. You need to have some type of idea about the work. One thing that I'm seeing time and time again, I wanted to create $190,000 in sweat equity in 12 months at the time that I bought my home. Okay. No ifs, ands, or buts about it. I wanted to do that. In doing that, right, it was my responsibility to manage that process. Never just let your contractors do whatever they want to do. It is your responsibility. I want you to think about it. We made $190,000 in 12 months in sweat equity is how I look at it. That's a full-time job. That means that I was here every single day looking at that property. But what I love about the 203K is that the contractor, and Stephanie can shake her head if I'm wrong, is supposed to start the work, and they're paid out in draws. On that full K, it's 4. Okay. And then on ours, it was two different draws. But let me tell you what happened when it comes to that scope of work. We had an open staircase system. That's how the house was built. When the 203K expert came out to do the final walkthrough, we did not receive our final draw. The reason is it was mandated that we have handrails. It's so many elevations you have to have. You must have handrails. So we had to then come back and install the handrails in our house to get that final draw. And we worked it out because we have this, man, I'm really remembering everything now. We have an Electrolux 36-inch stove, right? I can tell you right now, the price superseded what the average cost of any stove was. So we had to work on our handrails to get the stove and the handrails. That's kind of the best way that I could put that for you. It was totally unexpected. And I still don't like the fact that we have handrails in our house because I love that open staircase system, but I had to have them. One word of advice, the contractor has to work with the 203K consultant. Thank you, Toya. And Toya is a licensed general contractor here in the state of Illinois. We ran into problems where the consultant priced out the job or approved the loan too low and they did not meet our contracting price. That's a great piece of advice from a general contractor. Toya is a realtor. In addition to being a realtor, she works every single day in the purchase rehab environment, overseeing every aspect of that. And so great advice from someone who is a licensed contractor. The fact that you got to work with that consultant to make sure that that pricing is going to work, especially in today's market when the pricing is increasing so substantially for the cost of supplies. Very familiar with the work. However, I'm new in the market being Georgia. I have seen so many horror stories with contractors not completing jobs and walking off the job. Um, Let me say this. I have done numerous purchase rehab transactions. At one time, I was flipping houses. I flipped 7 houses in a year. My next door neighbor, oh, I got to tell y'all this story. Stephanie, I'm going to unmute you in a second. My next door neighbor bought a 2-flat on our block. When they purchased the 2-flat, they converted it to a single family home. Now I live on one of the best blocks in all of Bronzeville. We eat at each other's houses. We support each other's kids. Like, our block is really tight. Well, my next door neighbor actually gained the most equity in the least amount of time because he took that 2-flat and converted it to a single family home. And we're in a community where single family homes appraise for substantially more than multifamily properties. Now, when we were talking about West Woodlawn, a community on the south side of Chicago yesterday, Wayne Bill is 100% about preserving the community. However, from an investor standpoint, in West Woodlawn right now, there are a lot of vacant 2-flats. It would be ideal for people to take those vacant 2-flats and convert them to single family homes because they would likelihood see the most appreciation in the least amount of time. Oh, she went away. And so definitely that is also a option. Hey, Stephanie, is that audio working yet? Yeah, I'm not getting it. Not getting it. It ain't coming through for us. Let's see here. I will have to ask around. Yes. What is the loan limits of the 203K? Hey, Wilbur, how you doing today? It is whatever the FHA loan limits are. So you can click on the link. We do have those FHA loan limits. So single family detached is 1, 2-flat, 3-flat, and 4-flat. And what I do want Stephanie to clarify for me, I'm going to ask her this. Hey, Stephanie, can we still do?
Can you
Oh,
hear me?
I can't hear you. Can we still do a 203K on mixed use property up to 4 residential units?
Yes, we can. We can. So the way that works, I'm actually doing one now where there's 2 storefronts and 4 apartments. That's still a 4 unit. However, none of the money can be allocated to the commercial space. The commercial space has to be rehabbed by the buyer's own funds. And depending on the condition of that commercial space, the buyer may have to show that they have assets set aside in order to rehab that commercial space, because that commercial space could cause health and safety issues to the apartments above.
Okay. Hold on. Stay right there. I'm going to mute you for 1 second because I don't want the feedback. So one thing to keep in mind, and Stephanie, we had a client, he bought the corner of 73rd and Halsted. There were 4 residential units upstairs, 2 store fronts. The residential space must supersede that of the storefront. And so you could do a 203K on a mixed use purchase. Actually, I'm looking for a mixed use purchase right now to do a 203K. And this was pointed out to me by Bruce Montgomery. When you think about underserved communities in the city of Chicago, when we go in predominantly Hispanic communities and non-minority communities, you will see a lot of mixed-use properties that still exist. In predominantly African American communities, they do not exist. Like, there's so few of them, we are fighting to get them. And here's why. Those communities have more wealth because you have a business and housing in the same location, under one roof, under one structure. And oftentimes either the storefronts can carry the building or the rents can carry the building, right? So looking at 203Ks, especially for entrepreneurs to take those mixed use properties and have a work live space, it's nothing like it. And so if you have any mixed use properties in the city of Chicago, 4 residential units upstairs, your girl is looking for one. Okay. I just need you to know I am looking for one right now. So let's see here. She knows exactly what she's talking about. I followed her for years and she has changed tons of lives. Yes, Rodriguez, they are giving you compliments, Stephanie. They say you changed lives.
Thank you.
If you have any questions, guys, come and drop those questions down. Um, I really just wanted to come and give you an update on the 203K. A lot of people do not understand its true value. Yes, I used it for the home that I live in. Yes, we're sitting real pretty right now with about $450,000 in equity. 190 of that was created in the first 12 months of living here. I believe that we should not live above our means, and I can be frugal, even though I shop a lot. I can still be very frugal. So if you are seeking information on the 203K loan, click on the link. All of Stephanie's information is in a packet available for you. If you are looking to buy and need an agent, of course, reach out to me, as we are looking to create legacies. And creating those legacies, a 203K loan is a way to do a purchase rehab. That house on your block that has just been an eyesore, or you currently renting and you're driving through the community and you see something, think about purchase rehab as a finance alternative. Stephanie, in closing, did you want to say anything?
Yes, I just wanted to let everybody know that right now we're in a seller's market and it's a bidding war. Every time you put a contract in, they want the highest and best, the highest and best. But one thing that I noticed with my 203K people, nobody's asking for the highest and best on those undesirable homes. Matter of fact, they're still taking in low offers. So this is your opportunity to get into a home that needs work and you're not in that bidding war. And then you can turn this property into the desired property of your choice without having to be, you know, ask for the highest and best and waive your inspection fees, and they can't pay any closing costs, and can you close tomorrow, and all of this other ridiculous stuff that's going on lately.
Yeah, I'm laughing. Hold on, let me mute you 1 second. I'm laughing because it is like closing tomorrow. And I don't know if Stephanie still has her real estate license. She can let us know, but she knows both sides of the business like the back of her hand. One thing, and I'm going to say this and Stephanie can correct me, generally the interest rate on a 203K is going to be 1 to 1.5 basis point higher. So let's say that today the interest rate is 3%. You likely would pay 4.5% on a 203K. Generally, I've seen it run 1 to 1.5 basis point higher, but I'm going to let Stephanie answer that question. Did you
That
hear me,
is
Stephanie?
correct. Yes, I do hear you. That is correct. The renovation rates run a little higher. So I do get people that say, well, wow, it's a whole point and a half higher. Well, you have to ask yourself, where can you go and borrow the money? 20, 30, 40, 50. I'm doing some that's $200,000 and $300,000 in rehab for a 1.5% interest rate. No place, no how. So it's still a very low interest rate when you're borrowing money to rehab your property. As soon as the rehab is done, then you can look forward to refinancing and getting the choice that you want to go with in terms of a conventional loan, an FHA, and then going with the lower interest rate. But go ahead and take that higher interest rate to get the property of your choice and to get it fixed up the way you want it, and then you can refinance out of it right away once the work is done. If it's a full renovation where it's $35,000 or more, you can even roll in up to 6 months of mortgage payment. So you really haven't even made a mortgage payment on that high interest rate, and you're already ready to refinance it and lower it once the work has been completed.
What are today's loan limits?
FHA loan limits, you're looking at today, with the, FHA single family, I want to say it's like 340,000. Give me 1 second. I should have been prepared to answer that question. I have all of the questions listed out on my desk here, believe it or not. Here we go. I have it right here. So with your FHA, your single family is 379,500. 2 units are 485,800. 3 units are 587,250, and 4 units are $729,800.
I'm gonna mute you
So
1 second. Those are great loan limits. And the reason I just wanted to say this is contingent upon where you're located. So some places, the FHA loan limits are higher than this. This would definitely be in the state of Illinois. Keep going, Stephanie.
Yes, that is correct. So basically, the purchase price plus rehab amount can exceed the loan limit. If it does, then you would have to pay the difference out of pocket.
The
We
next
also
question.
offer this program for conventional financing as well, because you may get someone that wants to buy a condo or a townhome where they have to go conventional. We can use the same product for conventional.
Okay. So how much should we anticipate putting down? A 203K purchase rehab loan is 3.5% of the purchase. Yeah, I think it's the purchase rehab amount. But Stephanie, when I mute her, she can correct me. So it's, if you were buying a house for 200,000 and you need $100,000 in rehab, you need 3.5% of the total being $300,000. Those loan limits that I just provided are specific for Illinois. You would need to check your FHA loan limits in the state where you live. Are the credit guidelines similar to most loans? I would say 620 is the, and let me say this is going to be contingent upon the lender that you use, because each lender has overlays to whatever that base is. And so, yes, it's very similar, but the more units you buy, I do believe you have to have stronger reserves on hand. How much time do you get to fix up the home? Well, you can roll in 6 months of principal, interest, taxes, and insurance into that amount. So I would say you would want to complete the property in 6 months. I have a question for Stephanie. Stephanie, can you see the questions when I post them?
Yes, I can. Yes.
Okay. So I'm just going to post the questions, but let you finish with your thought process.
Okay. How much time do you get to fix up the home? That's what you said for 6 months. They give you 6 months, but of course, if you need additional time, you just have to request it. They're very lenient with giving additional time. Does the appraiser have to be a 203K certified? Yes, the appraiser should be a 203K certified appraiser, because this appraiser has to let us know what the property will be worth in its after improved value, what it looks like once it's fixed up, not its as-is condition. Yes, it does. It includes the rehab amount. So the purchase price plus rehab amount cannot exceed the loan limits. Can you do a 203K? How much are units? Yes, you can do a 203K on 2 to 4 units.
Whew, they asked some good questions today, Stephanie.
Very good. Very good question. Yes, you can. Yes, you can do it on multiple units. Yes.
Oh, here we go. One more.
Okay. And you maybe what the work that you do. Well, I mean, it depends on what the work is. Of course, if it's you're getting a new roof on, you don't want to move in. If it's a multi-unit and maybe the one unit that you want to live in is already completed while the contractor is working on unit 2, 3, and 4, yes, that shouldn't be a problem. But you would have to check with your, if it's in the city of Chicago or if it's in one of the suburbs, sometimes you have to wait until you get that occupancy report, and they may require that all the work is completed. So you would definitely have to check with the village or the city of where you're buying the property at.
So, guys, one, you've asked some great questions, okay? Two, I want you to click on the link in order to get all of Stephanie's information to be able to reach out to her. What I'm elated about was that because we ride and dies, we figured this out. Even though none of our technology is working correctly today, we did figure this thing out. Let me see if I can answer this question, and then I'm gonna bring Stephanie back in 1 second to say her goodbyes to you. So, if you refinance, do you have to meet any specific seasoned ownership requirements? That's a good question. So, someone asked that question earlier. I waited 12 months in order to do a rate and term refinance because I knew we were going into a conventional loan. And one of the reasons me and Stephanie are friends is because we were both loan originators and I didn't do 203K loans. Okay. So she was the person, she was my 203K loan go to. I want to say we both became licensed real estate brokers about the same time as well. So we were both playing both of those roles. And so I waited 12 months. The seasoning issue is technically a consideration for how you're going to refinance. So FHA will allow you to refinance out of that loan. One, you paid upfront MIP. They ain't got your money, right? And you've paid mortgage insurance protection for every single month that you had the loan. The question really is for the end lender that you decide to go with, as each of them will have different seasoning requirements, okay? Each of them will have different seasoning requirements. Stephanie, I'm going to bring you back in to say what you need to say in closing. There you go.
Okay. Thank you guys. Sorry for the technical problems that I'm experiencing on my end. But like Marky said, I'm available to answer any questions that you guys may have. Renovation is a great, great product. It's very nice in terms of, it almost gives you the feel of new construction because you get a chance to pick your paints, your carpets, your tiles, your cabinets. You get a chance to be involved in what you want in your house opposed to buying a house and all of that stuff is already there from the previous owners of what they like. So it gives you a chance to just kind of get a feel of new construction. It's a very easy loan. It's not complicated. I can definitely help you from beginning to end to make the process as smoothly as possible. If this is something that you are considering, as I mentioned before, you want to have that licensed, insured, bonded contractor already lined up, ready to go, so that he can kind of get in there and give you an idea of what you're going to be looking at in terms of cost to rehab the property. My rule of thumb has always been, if the item can fit in your car, do not put it on the list to be rehabbed. Because keep in mind, this is a 30-year mortgage. We shouldn't be financing kitchen faucets and doorknobs and things of that nature. You don't want to do that. If it can fit in your car, pay for it out of pocket, and then just have the contractor to go ahead and put it into the home. That's pretty much it. As Marky said, I'm available. Hopefully we'll do this again, and my technology will be much better. If I have to come to you, Marky, I will, because like I said, you're the brainiac in this, man. You got this guy, no hands down pat with this technology. I don't know how you do it. I just don't. You're good at this, boy. Wow.
No problem. We can definitely bring you to us, Stephanie. I want to thank you for coming on today, for being a part of this. This is not our first time. Stephanie and I have done Facebook Lives together, and we were sitting side by side well before the pandemic. Somebody said, I didn't even see the link, laughing out loud, just got the notification. There you go. Click on that link and all of Stephanie's information will automatically come to you. We do need your name and email address. But let me tell you the purpose for the day. One, it was to do an update because we haven't done one in quite some time. Two, because I believe 100% in the 203K loan. Every person who I know who has done one has created equity for themselves that will be a part of their legacy, including me. There's no way. I don't even know where I would have got this kind of equity from if it was not for a 203K loan. The real estate market is shifting. Nick Liebert sent out an email yesterday. We are not seeing as much demand today, and interest rates are going down. Okay. So we need to make this last half of the year everything, and I mean everything we want it to be. This is the no excuse zone. Let's get it done. Make sure that you click on that link, reach out to Stephanie. I plan on having some multi-families for you because we got some new stuff going on, okay? As we continue to grow our business. Thank you guys. We appreciate you. And if you have any questions, please feel free to inbox us. Make it a fabulous Friday to fund your real estate deals. Talk to